In this video, we're going to be making the perfect $5,000 dividend growth portfolio, the end-all be-all, sleep good at night, get rich long-term in the future, $5,000 dividend growth portfolio with 5 different dividend growth ETFs that not only are going to most likely keep growing over time as far as ETF price, but are going to pay you dividend income substantially and more of it long-term. So if you want to see which 5 ETFs I would use for the perfect end-all be-all $5,000 dividend growth portfolio, make sure to stick around, drop a like down below, and let's get right into the first ETF. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now first, before we go over the first ETF, I want to lay some groundwork. How are we even picking these different dividend growth ETFs, and how did they make it into my $5,000 portfolio? Well, as far as picking the perfect, or at least as close to perfect as possible, dividend growth style ETF, you're going to want to look for a few things. Now, first off, you're going to want an ETF that at least historically has continued to move up in price over time, which is going to make your portfolio grow and grow and grow in the future. On top of that, you're going to want to have a diversified portfolio with a set in stone strategy that's pretty much bulletproof no matter what happens in the stock market. Now, along with that, you're going to want an ETF that not only pays a dividend, of course, because we're talking about dividend growth ETFs, but you're going to want an ETF that offers at least a decently high or somewhat high dividend growth rate. Now, dividend growth rate is basically the annualized percentage rate of growth of a particular stock's dividend over time. And for an easy example of this, a company's dividend payments to its shareholders over the last 5 years, for example, let's say your number 1, they were $1, your number 2, 105, your number 3, 107, your number 4, 111, and your number 5, 115. Now, basically, all you do is take your number 2 divided by your number 1. That gives you a 5% growth rate. Your number 2 to 3, a 1.9% growth rate, etc., etc. Now, the reason dividend growth is so important, especially for building out our $5,000 portfolio, we're not really starting with all that much capital. Just $5,000 isn't really going to move anything all that much, at least in the short term, but by investing into different dividend growth style ETFs that pay more and more over time and that have a nice high healthy dividend growth rate, even if you're not going to get paid that much in dividends from your number 1, maybe your number 3, 5, 7, 10, etc., the dividends are going to be much higher, at least they have been historically. Which brings me into our first position. This is going to be $1,000. $1,000 of it would be invested into SCHD, which is the Schwab US Dividend Equity ETF. Now, remember what parameters we talked about earlier, everything that we're looking for. This ETF basically has all of it and then some. This ETF has grown like crazy over time, up around 218% on the max time frame as far as price return only, not even including dividends. This ETF is cheap to own at just a 0.06% expense ratio. It has a super highly diversified basket of holdings. But not only that, this ETF offers a 3.5% trailing 12-month dividend yield, but most important, just like what we talked about, this ETF has paid more and more in dividends over time and has a dividend growth rate long-term in the 8 to 10% range. Now, that means that year over year, at least historically, you're not only going to get paid dividends, but you're going to get paid more and more in dividends if history were to repeat itself. Now, this is definitely going to help stretch out that small portfolio of just $5,000 and make the portfolio much more powerful in the future because, of course, an ETF like this does have a nice, healthy dividend growth rate. The next ETF that I would add to this portfolio, just another $1,000 sliver, so now we're at $2,000 of the $5,000 portfolio, would be DIVO, or the Amplify CWP Enhanced Dividend Income ETF. Now, DIVO has also grown like crazy over the long term, up around 60%, and this is just since around 2017. But on top of that, DIVO has a high quality basket of holdings, an amazing strategy to match it, and DIVO offers around a 4.5% trailing 12-month dividend yield, which is going to give you a good amount of investment income basically from day one. Now, although DIVO does pay a dividend monthly, there hasn't been all that much dividend growth historically, only around 2 or 3% over the last 5-year time frame. But still, DIVO has moved up into the right long term, has a rock solid strategy, and does pay a nice solid yield to start with, along with a little bit of dividend growth historically, which is why DIVO would without a doubt be a $1,000 sliver in this long-term dividend growth portfolio we're building. The next $1,000 sliver, 1/5 of the portfolio, would have to be without a doubt VOO, or the Vanguard S&P 500 ETF. Now, honestly, I could probably make this video 5 seconds long and say, just invest the $5,000 into VOO, set it and forget it. And honestly, there's very few portfolios out there that you can build that are going to outperform the S&P 500, which is why VOO is so popular, with $1.18 trillion in assets under management. Now, VOO's up around 395%. It tracks the S&P 500, pays a 1.3% trailing 12-month dividend dividend yield and does have some decent dividend growth to match. VIG is a great, without a doubt, foundational position for really any portfolio out there, especially for those dividend growth investors that don't necessarily know what they want to buy into yet. VIG, at least historically speaking, has never let down investors over the long term. The next $1,000 sliver in the portfolio would be DGRW, one of my favorite dividend growth style ETFs, the WisdomTree US Quality Dividend Growth Fund. Now, this ETF has grown like crazy over the past 10 or so years, up around 220% as far as price return goes. This ETF has a super high quality basket of holdings, tons of familiar names in the top 10. But along with that, DGRW has a 1.58% trailing 12-month dividend yields, so although it's not the largest dividend to start, DGRW does also pay a dividend monthly, which could come in handy especially for investors looking to use their dividends for things like bills and other things. But on top of that, DGRW does have some dividend growth historically. Now with DGRW, you're probably going to make the majority of your money off of price return or capital gains, but it still does pay a dividend, it pays a growing dividend, and this ETF invests into some of the highest quality stocks across the entire market, if you ask me. Now, the last and final sliver of this $5,000 portfolio that we're building of the highest quality dividend growth names across the market, in my opinion, would be none other than DGRO, one of my other favorite dividend growth ETFs, which is up around 140% since around 10 years ago. Now, I love DGRO because I love the top 10 holdings in this ETF. It's very hard to find a basket of holdings like these ones, and although a lot of the ETFs we talked about do have holdings that sort of overlap, some investors hate that, some investors don't mind it, DGRO has some of the best of the entire bunch. Now, this ETF not only has grown like crazy over time, but as you can see right here, it has a 2.3% trailing 12-month dividend yield and a 10.84% trailing 12-month dividend growth rate. That means that over the last year, this ETF is already paying investors that held onto it last year around 10% more in dividend income, which again might not sound like all that much to you, but once you get 10 shares, 100 shares, 1,000 shares long-term into these different ETFs, a 10% increase is going to be substantial and is definitely going to give you a lot more dividend income, trust me. Now, like I said, DGRO basically crosses off every single thing we're looking for in a high quality dividend growth ETF holding. It's grown like crazy, has an amazing strategy, has super high quality holdings, pays a nice starting dividend, and has paid more and more in dividends long term. So for those reasons, along with others, DGRO would be the final portion of the dream perfect dividend growth portfolio worth $5,000 if you ask me. So those are 5 of my favorite dividend growth style ETFs that all have the potential to grow over time, pay dividends from day one, and have paid more and more in dividends long term, but along with that have strategies to match their performance. Now, when I first started investing, I wish I would have not done as much stock picking and just bought some high quality names like the ones we talked about in this video. But luckily for you, especially if you're newer to investing and you came across this video, hopefully some of those names gave you some ideas to invest into. Now, the last thing I want to say is that any one of those ETFs, honestly, for the most part, could build out a nice long-term portfolio. But for this video's sake, I want to go over 5 different high-quality dividend growth ETFs that we could build a $5,000 portfolio equally weighted across the board. Now, lastly, I want to ask you guys down below, if you were to build a $5,000 dividend growth portfolio and you were, for whatever reason, only allowed to invest into one dividend growth ETF, which ETF would you invest into and why? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.